So now we are very pleased to continue indeed with the next event at the conference today. And we are very pleased to welcome Verena, the chair of ESMA, for a keynote address, Regulatory Priorities for a Resilient and Competitive Securities Post-Trade. Welcome, Verena. Thank you.
Thank you very much, Anna. Good morning, ladies and gentlemen, or actually just good afternoon, I suppose. It's a great honor to be here today, and I really want to thank ECSDA for the kind invitation. And I will follow on a bit on what the panel just discussed, because I want to very briefly try to link also the wider developments in the EU capital markets with the T+1 topic, which comes next. As Europe advances its journey towards a more integrated and dynamic financial system, strengthening the resilience and the competitiveness of our post-trade environment must remain a core priority. The post-trade layer is in a way the silent engine that ensures that markets function smoothly, safely, and efficiently. After briefly touching on how to strengthen our EU capital market, I will focus my remarks today mainly on the move to T+1, which is such an essential project for all of us. We live in a world marked by technological transformation, growing cross-border activity, and an evolving geopolitical landscape. In this context, we must really focus on reducing fragmentation, promoting also innovation, as well as enhancing the operational resiliency and efficiency. And ultimately, we also have to make sure that we have the right supervision in place within the single market. These priorities are essential not only for safeguarding financial stability, but also for enabling Europe's capital markets to attract investments and support growth, and finally deliver on the goal of achieving a more globally competitive financial union in Europe. A resilient and competitive post-trade environment is fundamental to advancing the EU's ambition towards the Savings and Investment Union. Let me just remind us all that the SIU initiative seeks to channel Europe's deep pool of household savings more efficiently into productive investments, supporting innovation, sustainability, and long-term growth. But achieving this vision requires more than just a solid policy approach. It also depends on the smooth, secure, and harmonized functioning of the infrastructure that underpins every single transaction that takes place in Europe. And as just discussed in Anna's panel, by reducing post-trade fragmentation, by increasing interoperability, by improving settlement efficiency, and by fostering greater supervisory convergence, we can remove the barriers that currently exist and that limit not only cross-border investments, but also increase the cost for both investors and businesses. Strengthening the post-trade framework is not simply a technical exercise. It's, to my mind, a strategic enabler that empowers citizens to access broader investment opportunities and allows EU companies to tap deeper, more diverse funding sources. This is what we need to achieve to bring the Savings and Investment Union to life. We're all looking forward to the publication by the Commission of the further SIU legislative proposals in the next weeks. A key element of the proposals is expected to cover market infrastructures and their supervision. We as ESMA have been a successful EU-level supervisor for over a decade. We believe we're able to, and certainly stand ready to, take on an enhanced supervisory role where that makes sense for the EU markets. As you know, already under CSDR refit to strengthen the EU-wide voice, ESMA will become a member of the CSD colleges of supervisors for those CSDs that are cross-border and active in at least 2 host member states. This represents a step forward in ensuring supervisory convergence and aligning supervisory practices. By bringing together national competent authorities, central banks, ESMA, and the EBA, these colleges create a structured forum for cooperation and for information exchange. At the same time, if we want to develop deeper, more liquid EU capital markets under the SIU, we should consider to go further and move beyond just bringing national supervisors together in colleges. To ensure that prudential, organizational, and conduct of business requirements for CSDs are applied in a uniform manner, there is merit in thinking about ESMA becoming a supervisor, at least for the most significant cross-border CSDs. We will achieve a level playing field and reduce costs and burdens for those CSDs and groups of CSDs that operate or that are seeking to operate cross-border within the single capital market. But let me now move on to talk about the key topic that is occupying a lot of us at the moment, and that is how we shape the future of our capital markets also in reducing the settlement cycle to T+1. We all, I think, recognize the clear benefits that this transition can bring: a more resilient marketplace, better protected against crisis. Lower collateral requirements should allow liquidity to be preserved when it matters most. We saw this advantage, I think, in the United States at the beginning of this year, where the transition to T+1 delivered tangible benefits, even during what were quite turbulent market times. But it is not just about resilience. T+1 will also make our markets more competitive. By keeping pace with other leading jurisdictions and embracing modernization, I am convinced that the move will support the attractiveness of the EU capital market. As we pursue the goals of the Savings and Investment Union, we must be ambitious. We saw in the US that the journey to automation is not automatic. Here in the EU, we should aim to go further in terms of modernizing our markets and using this as an opportunity to modernize our markets. Neither for us as regulators, nor for you at firm level, this move should be seen as just another compliance exercise. It's a strategic investment to ensure that we remain competitive. So, where are we now? The groundwork is complete. The diagnosis has been made, the solutions are largely defined. All the pieces of the puzzle are moving into place. The legal mandates are already there. By the beginning of next year, we should have all the regulatory requirements finalized and all key industry recommendations clarified. The amendments to CSDR have been published, and so it's clear there will be no delay and no postponement. With a bit less than 2 years to go, the countdown has clearly been launched. 692 days, or if you just count working days, it's just under 500 before the 11th of October 2027, and counting. Sounds like quite a lot, but actually, when you think of all that needs to be done, it's not that long. From ESMA's side, to support the T+1 move, we published the amendments to the RTS on settlement discipline in October. The amendments further clarify certain central aspects of the functioning of a T+1 settlement cycle. The timing to send allocations, confirmations, and settlement instructions, the need to automate and standardize messages, and the functionalities all CSDs should offer. All this in line with the recommendations made by the EU T+1 Industry Committee in their high-level roadmap. On this, allow me a short diversion to highlight the unique governance that has been set up for the purposes of implementing T+1 in the EU. Public and private actors are working hand in hand, building a close collaboration between industry and authorities. Since the establishment of this public-private partnership last January, so many people have been involved and a lot has been done. A big thank you to everyone on the Industry Committee and in this room under the leadership of Giovanni Sabatini, who is here and will speak later, and a big thank you to everyone for all the work done. We've reached important milestones already, but some of the biggest challenges still lie ahead of us. As we enter the next phase, our focus shifts to making critical changes that are needed to move to T+1. Each one of you plays an essential role in this process. Let me be clear, early and thorough preparation is essential. Quick fixes will not be sufficient. Every entity across the trading and settlement chain must be fully engaged, and every one of us needs to do our own part. So, my call today is to all market participants, the time to act is now. Plan, budget, allocate resources, and rigorously test system updates. I would argue that this transition offers European firms an opportunity to review their front-to-end processes and organization, to explore new partnerships or outsourcing options, and to invest in lasting efficiencies that will ultimately strengthen competitiveness for years to come. In that sense, T+1 should be a powerful driver to greater automation and standardization, enhancing interoperability and efficiency across the EU markets. As second movers, the EU is uniquely positioned and should make the most of the lessons learned from other regions, tailoring those lessons obviously to our own markets and our own market specificities. We all know the EU context is very different, starting with the fragmentation of our markets and of the multiplicity of jurisdictions, currencies, and actors. But certain aspects of the EU-US move, such as the communication and testing dimensions, could serve as inspiration for our own unique EU T+1 journey. Looking ahead to October 2027, next year will be the year of heavy lifting. To make T+1 a success, the role of CSDs is absolutely critical. How CSDs implement the necessary changes will be central for other market participants to plan their own adjustments. But let me stress, this transformation goes far beyond CSDs themselves and the settlement process. It touches every single part of the trading value chain. Many of you here today represent major stakeholders. You are informed, you are engaged, and I believe you are fully committed to making the necessary adaptations. But no one can do this alone. It is imperative that you reach out to your clients, you provide them with the information and education and tools that they need. This will allow them, in turn, to keep their clients and business partners informed and prepared. Commitment at every level of the chain will be essential for the success of this big move to T+1. While the preparatory work and heavy lifting rests largely with you as market participants, we as public authorities stand ready to ensure we find solutions when hurdles arise. This is a collective undertaking, as I already explained, also exemplified in the governance. We must have each take our responsibility to get us to T+1. Authorities and industry alike must make sure everyone is aware and is ready. Active, clear communication is therefore also a shared duty. Coordination is crucial at every level and not just within the EU either. We must stay in close contact with our counterparts in the UK and in Switzerland, who are also preparing to move to T+1. And we also need to do our best to reach out and address any concerns or issues raised by non-EU market participants. Our focus as public authorities will be on educating and informing, but also monitoring the market's preparedness. National competent authorities, and Ante and Wojtek are here, are obviously also making sure that they are assessing progress and have formed, in some cases, dedicated stakeholder groups in their own countries. Their role in raising awareness and ensuring that every jurisdiction is ready is of paramount importance. So let me reassure you, ESMA is fully committed to supporting you through this journey, which we realize is not easy. We are convinced that enhancing efficiency and resilience will unlock more effective trading and more robust post-trading processes, and ultimately it will help us to create more integrated and more attractive European capital markets. Let me lastly focus on the future beyond. The world will not end on the 11th of October 2027, nor will the changes in the post-trade landscape stop at T+1. This move should, however, pave the way for the future evolutions in the post-trade market. We already see new technologies such as DLT that clearly have the potential to fundamentally reshape the post-trade environment. As we work towards advancing the EU flagship project of building a savings and investment union, keeping up with innovation and new technologies is crucial. All of us, policymakers, regulators, supervisors, and market participants, need to reflect on how regulation, supervision, and market infrastructures may need to adapt to the use of DLT. In the face of global competitive pressures, it's ever more important we get this reflection right. DLT offers the potential to streamline settlement processes, ensure atomic settlement, reduce operational complexity, and enhance transparency by enabling real-time data sharing. For CSDs, it opens opportunities to modernize core function, support new forms of digital securities, and improve cross-border interoperability. You will not be surprised to hear me say, though, that the adoption of such technologies must be underpinned by robust regulatory safeguards to ensure resilience, cybersecurity, and legal certainty. By fostering responsible innovation, the DLT pilot is one example of how the EU has tried to facilitate innovations in new world applications. It allows firms to operate DLT-based trading and settlement systems under targeted exemptions from the existing regulatory framework. In that sense, the DLT pilot serves both as an innovation catalyst and as a learning platform, ensuring that in the EU we can implement new technologies while maintaining the safeguards necessary for a stable and trustworthy financial system. So far, uptake has been a bit slow, but the projects that have been authorized across several member states already provide useful insights. Let me mention the first DLT market infrastructure authorized under the DLT pilot is the DLT settlement system operated by a CSD, and that is the CSD Prague. Outside of the DLT pilot regime, other examples where CSD use DLT include Clearstream's D7 platform and Euroclear's DFMI initiative, which show how embracing digital transformation can modernize post-trade services. I'm happy to see that CSDs are not afraid to grasp the opportunities that innovation offers. Adopting new technologies can increase efficiency and improve CSD's services for market participants, issuers, and investors. As ESMA, we've been closely involved in the DLT pilot from the outset, assessing applications, ensuring supervisory consistency, and clarifying how exemptions interact with existing rules. We've also issued guidance to facilitate a harmonized interpretation of the DLT pilot provisions across the EU. Earlier this year, ESMA published its first report on the functioning of the DLT pilot, and we drew first lessons on trading and settlement of tokenized instruments, on managing custody, but also underlined how investor protection standards can be upheld in this new environment. We further flagged where current frameworks, MiFID II, CSDR, and settlement finality rules might not fit neatly into DLT-based models. And we made a number of strategic recommendations on how to make the regime more attractive. In particular, we have suggested amendments to the DLT pilot regime to make it permanent and allow for more flexibility. These findings will feed into the European Commission's review of the DLT pilot regime, which is going to be part of the SIU legislative package expected in the next weeks. Given the importance of embracing innovation for the EU capital markets, I think the DLT pilot review should be ambitious. Ideally, we should create a fully fledged framework for tokenization of financial instruments in the EU. For our part at ESMA, we will continue to support and promote the responsible adoption of technological innovation across the post-trade landscape. Through relevant regulatory guidance, supervisory coordination, and active engagement with the industry, we want to help ensure that new solutions enhance efficiency without compromising financial stability or investor protection. To conclude, as Mahatma Gandhi once said, the future depends on what you do today. I believe that's quite a good motto to end my remarks on. We need to collectively work with determination and ambition to make T+1 a reality. The work needs to be done now, today, tomorrow, the day after tomorrow, so that we are all ready by the 11th of October 2027. Achieving T+1 while at the same time fostering innovation and making best use of new technologies such as DLT will be determinative in strengthening our capital markets in the EU. Building the Savings and Investment Union with efficient, competitive, and resilient market infrastructure is what we need to achieve a stronger future for the EU. Thank you very much.